Hey guys, welcome to another exciting episode of Breaking Bitcoin. We've got some obviously very important news coming in this morning about the Binance KYC hack. So in today's video, we're going to go over everything that we know about the Binance KYC hack, who's affected, if you are potentially affected, what this really means, whether it's even real, and if you are affected, what steps you can take to protect yourself. Also, we're going to talk about North Korea and the potential roadmap that if the first world governments do want to take a harsh stance on cryptocurrency, as they might in the future if they really do feel like their central bank assets are being heavily competed against and they're going to lose their share of control over humanity, what path they will likely take in their war on cryptocurrencies. I got some good speculation for you guys. And Walmart launching its own cryptocurrency. We'll see if it'll be the same thing as Libra or not. But either way, we're going to break it all down in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live for you in the studio. Today is August 7th. It's Wednesday, 2019, foul year of our Lord. Hope you guys are doing fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on the Roku app with the Investor News Channel app. If you guys want to support the show, make sure to subscribe, follow, share, and engage in the live chat. And if you're watching us on YouTube, hit the thumbs up button. We appreciate that. All right, guys, we've got a fantastic show for you guys today. As always, today's show is brought to you by the Cracking Cryptocurrency Premium Trading Group. If you are tired of Telegram groups leaving you holding the bag and you want to trade with a professional team who provides their education in a no-nonsense, transparent manner, then head over to premium.crackingcryptocurrency.com. Let us walk you through the Pathways to Profit course. Teach you how to build your own technical strategy from the ground up, learn how we manage our money, our risk, and our emotions, and benefit from our supportive community of traders and investors. That is premium.crackingcryptocurrency.com. All right, guys. So, fantastic show. As I mentioned earlier, wrong mouse. It is this mouse. Sorry, guys. I got a new setup, a couple new things. Again, I just wanted to touch on the EOS trading competition. Of course, I am a team captain on the ByBit EOS trading competition. If you guys want to participate, then it's very easy. You just go to ByBit. You can register for the global competition on the main page, and you can join our team if you so desire. We are going to kick it in the butt. We've got the guys from the premium group. We're going to be putting on our trades. I'm going to create a private Discord channel just for the purposes of the competition so that we can punch it as hard as possible. All right, guys. With that being said, I want to thank yesterday's YouTube crypto comment giveaway winner, which was Ryan Alexander. Please get a hold of me in the Discord, sir. You have not done so yet to claim your crypto prize. And we're going to start off today's episode as we always do. As we always do, by giving away some crypto. So we've got the video pulled up here. We have 9 potential winners. Yesterday's video was Coinbase eating up the altcoin market, live Bitcoin analysis and trading. As you can see, we kind of blanked on the topic yesterday, whereas we had plenty of stuff to talk about for the topic today. But make sure you go check out yesterday's video. There is a fantastic area there where I talk about divergence. Of course, the timestamp is in there. So we're going to randomly pick a winner. And it is Tomas Riha saying, just checking if you improved your tips. Well, you're about to find out for yourself, sir. You are about to find out for yourself. So hit me up in the Discord. You know who I am, and I will tip you some crypto, my good friend. And I want to thank this month's crypto comment giveaway sponsor, which is X42 Protocol. Make sure to check them out at x42.tech. And we're back, guys. So there are going to be some people who are saying that that Binance is crooked, and it seems like my camera is crooked. Let me know if you guys think it's crooked in the chat. So if it is, if our camera is as crooked as Binance, then I will fix the camera. If it's not, I definitely don't want to be filming with a Dutch angle. So I did move the camera around a little bit this morning, and it looks okay to me. But what do I know? I stare at charts all day long. So All right, guys. Good to see you guys. I see the good. You guys were in here talking like 10, 15, 20 minutes before the stream started. So awesome. Just such a strong community that we have around here. I just want to say thank you guys. I love showing up every day and spending my afternoon with you. I see Cheap Vlog, Crypto Jack, Priz Ventures, Ken D, Thea C, Jonathan Fulcher. Good to see you, man. Thank you so much for catching a live stream, Johnny. Can't deny. Great theme tune. Thank you. Yes, they are good. All right. So moving right back to where we were in the live scene. Let's slide the microphone over here. And let's get into price. I guess the only one thing I did this morning is I went long on the pound Aussie yesterday. This is Forex. I went long on the pound Aussie yesterday, and I did end up taking profits, and I saw price was coming back down to my break-even price, so I went ahead and closed that position out. Overall, total Forex account up 20% from when I started. I did deposit a more significant amount of capital to my Forex account at the beginning of the month. This is going to be my second month of live testing. My first month was a small capital account. I've been very transparent with that. I put $100 on a Wanda. My first month, I made 10% on that. Second month with this pound Aussie trade, I am now also up 10% again, just in the first week of August on my Awanda account. I did deposit $1,000 at the beginning of the month, though. So I'm now trading with 10 times as much capital. So I'm going, and that's a relatively small account for me. So I'm going to be trading with this $1,000 throughout the month of August. And if it has the same results that I have in September, then I'm going to deposit a regular account size on here. Okay. It's tilting to the right. Okay. So does that mean I need to turn it to my left? If it is crooked to the right, then I need to turn it to my left, right? What's Ben say? I'm not a master of angles. This is going to be fun. Which would be your left while looking at the camera. Okay. Let's figure this out together, guys. Okay. Let's try. Okay. Can't really see the screen. How's that? Very professional. Better? All right. I'm glad we could share that moment together, guys. I think I turned it a little bit, but it looks okay. I think that's better. Is that better, everybody? Left down 2 degrees. Clockwise. I did, Midwest. That's kind of what I did. It's not perfect because I got the thing on a tripod, but I think that's better. Almost perfect. Hey, we'll settle for almost perfect. I'll spend some time with Ben after the stream and I'll get it to 100% perfect. But I want to get on with the content. Thank you guys for that impromptu adjustment. It's time for this is day 2. Better looks like my account balance. This is day 2 of not hot coffee, except for the morning coffee. My buttered coffee, that has to be hot to melt the butter. But yeah, I need an electronic leveler. But as I talked about yesterday, doing the iced coffee thing, it's pretty good, man. It's pretty good. It's not Graham Stephan that inspired me to do the iced coffee. Actually, I saw somebody sent me that video yesterday. They're like, "Oh man, like you're doing the Graham Stephan 20-cent coffee." No, I don't go to Starbucks. I've always been making my own coffee, man. That was the right direction. Okay, good. I already forgot which way I turned it. Moving on. Let's get into the markets, guys. Let's go over to my ByBit and we'll look at BTC USD. Okay, so here's the thing. Went ahead and exited my long position. So I'm out of my long position on Bitcoin. I'll wait for a re-entry. Didn't see an opportunity to get back in this morning. There was an hourly long up trade that we could have caught. I was working on other things this morning, and it's not the daily signal that I was looking for. But of course, anybody using the hourly would have caught that. We'll go look at that here in just a minute. So let's get rid of that. So we are looking at the bigger screen. Here we are back on the daily, though. Here we are back on the daily. As we can see, if we go down to the 12-hour, 12-hour did end up crossing under the signal line on the 12-hour close. On the 12-hour close, we actually, what am I doing? Yeah, this is UTC time. Okay, good. This is UTC time. Interestingly enough, candle opening up, coming back up over the last, I'd say, just about 12 hours, give or take, since the daily candle closed last night. It's actually, so that would be 7, so it's 7 plus 5, so it's like 17 hours past that. But again, I digress. Anyways, what's interesting is this. I got a lot of messages from guys in the group asking like, well, why did we close this position out? Because my exit indicator fired. But moving on besides that, so that's the reason as a technical trader, I exit the position. But a lot of people are going to feel that urge of to get back in the market. Every time they see a big candle move one way or the other, they're going to feel like going back in. And if we go to the hourly chart and look at how well you would have had to manage this hourly trade, here's your hourly long signal from WADA. And I did just pronounce that WADA. I'm like, I was listening to a Dune audiobook last night to fall asleep to. I am the kind of guy that needs to listen to audiobooks to fall asleep. That's definitely, remember guys, I'm single. I'm a single father. So that's definitely something that has to come up on initial dates with prospective females. Because if you're not cool with falling asleep to the stuff that I like to fall asleep to, the relationship's not going to work. Coffee and peanuts plus cracking cryptocurrency. Just a real good setup here. Hello, people. What's going on, Bullseye? Make my coffee with caffeinated water. You know, the gym I used to go to sold that Caffeine Joe, which is caffeinated water. I have a reverse osmosis water machine installed in my house. So unless there's a good way to caffeinate it myself, maybe I'll just get caffeine pills and grind them up. But that feels like going way too far. Coffee does pretty good for me. In fact, I've had to scale the cleaner that I've gotten with what I ingest, like the more garbage that I've pushed out of my body. I've noticed that I've become far more sensitive to caffeine. You guys have to remember, I don't use substances. I live very cleanly. And that allows me to be very focused and feel healthy because, again, everything that I do is value, quality, long term. But I've noticed that I used to just drink a lot of coffee. And over the last, I'd say 6 months, I've noticed myself become increasingly more sensitive to caffeine. So I've had to pare that down quite a bit, to be honest with you. Congratulations, Ken D. $4 is great, man. Now let's look at the value of your account balance, and the dollar value shouldn't matter. The percentage of your account should matter. So that could be very, very good, man. Awesome. Okay, so you would have had to manage this hourly position in Bitcoin pretty precisely, but of course there was profit opportunity there. We can see that we get a rising explosion level and Wadatar explosion crossing and closing above that level right here at noon UTC, at 12 o'clock UTC. And then you just got a good take profit candle on the next candle. You have 2 hours to take profit before you give it all back to the market and end the trade in a losing trade. So it's a very short term, almost I'd say 2 hour scalp trade. And again, the opportunity was definitely there on the hourly. We can see Minx giving the go ahead on this trade. Actually, we need to switch over. This was the Forex baseline. I apologize. Here we are with the cryptocurrency baseline. Sorry, the last thing I did last night was be looking at the about 0.3% of your account. Not bad. Not bad. I mean, not amazing, not huge, fantastic, spectacular gains, but, you know, that's not too bad. Right. And again, everybody's own, going back to the coffee thing, I'm not going to talk about freaking coffee in my own body all day morning. But everybody's biology is different. And again, I used to drink probably 6 to 8 cups of coffee every day for years. And I've just noticed over the last 6 months that I've had to pare that down. I still kind of drink the same amount of coffee. The coffee is just a little weaker because I find that I feel myself getting anxious, and as I get anxious, it's hard for me to concentrate. So that's kind of what I do. I like to be very level. When I trade it and just in general, right? Don't get me wrong. I like to get amped up when I go have fun. I'm having fun all the time. But you guys know from the show, I'm a pretty excitable guy. But I don't need a lot of, I wake up like this. So I don't need a whole lot of input. You know what I'm saying? So anyways, a good position here on the hourly from Bitcoin, but let's start off on the daily and work ourselves down. Okay. So on the daily, we do have some positive things. So the daily exit indicator has not fired yet. If we go over and look, it will be firing today. We have Minx crossing back inside the static line, which it has not done for a while. Fisher Transform has not fired off to the downside yet, but of course the candle isn't closed. It could be. It depends on the volatility of price moving to the downside. Now, if this is just a kind of a Bart Simpson behavior where we have price shoot up and then shoot down very quickly and then shoot down more and then shoot right back up, that often does happen for about a week, guys. Go back and look when that starts to happen in cryptocurrency, in Bitcoin in particular, because you have to look at every different chart. Every chart trades differently. Bitcoin trades differently than altcoin charts. I'm not allowed to say I don't do substances when I ingest the world's most abused substance 8 times a day. Yeah, I mean, I feel you. You're 100% right. But, I also take, vitamins in the morning. I take minerals. So I do use the term substances to impart upon what I mean in general. You know what I mean? Which is, I guess the reason why I say this is because most of the people that I meet, and I think it's just a part of the changing generation, right? 10 years ago, it wasn't like a thing to say that. But now, marijuana is very popular with everybody. It is very socially acceptable. I have no problem with marijuana. In fact, I'm very pro legalization from not only from a libertarian, but from a medicinal standpoint. But I don't personally use marijuana. I don't personally use any drugs. I don't do any micro dosing, which is actually what a lot of people in my role do. Again, I'm very, very supportive of legalization of substances across the board. And that's kind of where I stand differently from some people. I am pro all substances should be legal because I don't think that it's the government's job to tell you what you can and cannot put into your body. I think that I have no problem. And again, this gets complicated. As an ANCAP, I don't want laws, but I also have, so it's not that I don't want laws. I don't want rulers. I want rules, not rulers. So, I'm totally fine with laws, but I also believe in a logical progression towards a more ideal state, which states that I would like to see personal use decriminalized. I would like to see basically the pharmaceutical industry take over that. I think there'd be a lot of investment opportunity there. And I would like to see personal use completely decriminalized and completely legal. And I would like to see distribution, unlicensed distribution. I would like to see that punished. Now, that's not ideal. That's not perfect. That's not what I would want moving forward. But drug dealing is a problem, right? That does, especially when something is illegal. And that's been one of my main arguments all the time. Everybody kind of goes to different places of arguments. My main argument against drug criminalization has been people are going to want to do substances. And when you outlaw their substance, you now force them to become a criminal to do their substance, right? If using cocaine was just legal, then somebody could just go down to the store, buy some coke, sit in their garage, snort some coke, and do what they want to do, right? I have no problem with that. The things that are bad are already legal: assault, rape, bodily harm, all the things that are bad, right? There's nothing wrong, immoral, or inherently illegal about using a substance for your own personal enjoyment. I don't really care if that's heroin, meth, crack, cocaine, marijuana, psilocybin, LSD. I don't care what you want to do. I think that it should all be legal. I think they should all be safe, and people should have autonomy over what they want to do with their own bodies. Because there's no need to have those laws, because the dangerous stuff, if you go out and hurt somebody, then that's already illegal. Assault is already illegal. So, and I would argue that I think that decriminalizing drugs would actually see a decrease in violent crime, would be my argument. So rants on substances and its applicable goal. Yeah. But I think it's very important to make that distinction because, you're going to get a lot of people that are like, yeah, I'm an ANCAP and I'm a libertarian. And don't get me wrong. I love those people. I love the community. There's some fantastic absolute speakers and people who are at the forefront of philosophy and liberty. But unfortunately, there's a lot of younger people who just kind of latch onto the wrong ideas and they don't logically think things through. So I don't personally like the crime and the criminality that comes with, with drug dealing. I think that is a problem. I would like to continue to see that enforced to a degree. I do. I think that if you legalize drugs and you make it legal, I think you're going to create opportunities for that. I do not want unlicensed individuals with no qualifications running around peddling drugs. I don't want that. And I know that's probably controversial, and I'm open to have the conversation. But in general, I don't like most drug dealers that I've met, and I've met some. So then don't use my tax dollars to treat them. Yeah, so I'm cool with that, but at the same time, I think that we would spend much less. So there's an argument to be had here. First off, you're right. I don't think that taxes should go toward these things because I don't want the government in control of that. But it is incumbent upon us as citizens of a society that we want to function well to contribute to those who are disadvantaged. The government should not have control. But again, this kind of goes back to a lot of people in the space don't logically think these things through. You have to give to charity. You have to. You have to do something because there are disadvantaged people. There is a reason for the left and the right. And I lean more toward the right. I lean pretty hard toward the right. But there is a reason why there are advocates for the disadvantaged, because there are the disadvantaged in society. And it is our responsibility to try to help them out, because that is part of community, that is part of family, that is part of society, is helping those amongst you to the best of your ability. So if you don't want the government in control of that, because that's the club that they use, they're like, well, we're here, we take care of the little people, blah, 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 blah. Right. But you also do it with unrestricted authoritarian access to violence, right? You have the right to violence. That is the definition of the state. The state is the monopoly on the use of force. So we don't want that. We don't want a centralized entity with that kind of power to come to your house with guns and club you and kill you if you don't comply. So if we don't want to have a reason for the government, then it would be very much in our best interest if we cleaned up our own shit. And i.e. by that, I mean giving to charity, right? So if you don't give to charity, start is my whole point. Find something that you can do in your local community, ideally. Find something that you can do on a smaller, more local state scale if that's not applicable, if you live like out in the middle of the country. But I think there's always something that we can be doing in our local community. This is why I actually think churches do this very, very well. Churches are pretty darn good at supporting their local community by giving away food, by helping out with shelter, by helping out with gas cards. There's some churches around here. And again, I'm not a religious person, but there are some churches around here that do a fantastic job at that. And they get almost no money, right? And the government gets all this money and they do a terrible job of distributing the money and actually helping people get out of poverty or actually giving them the tools and resources that they need to make a change in their lives. It's just a dependent subsistence existence. So it's our responsibility. Have not met a drug dealer that takes Bitcoin yet. Yeah, Portugal decriminalized all drugs and it lowered drug abuse, Adam says, and drug issues became viewed as more as a health issue than a criminal, because it is a health issue. Legalize heroin. Yeah, heroin was legal for the longest time, and now it is illegal. I mean, if people want to do heroin, that's their God-given right, man. For real, man. It's not the government's job to say you can't do heroin. I mean, that's like me saying, hey, man, you can't drink IPAs. You got to drink stouts. It's your life, man. It's your life. All right. So, anyways, getting back to crypto. Coffee. Because I want to get to the Binance hack here pretty early. So anyways, on the daily, I don't see a re-entry signal. I assume that we are going to get the exit signal from Minx on the close of the daily. I did use the 12-hour to get out of the position, right? As you guys can see, I took the 12-hour exit signal from the Fisher and from Minx firing on the exact same candle, both of them giving an exit signal, and Wada Atar Explosion signaling an exit as well. So for those of you who don't understand that, Minx is comprised of two lines. It's a hybrid indicator. So when the green line crosses underneath the white line, that is an exit signal. Very similar to the Fisher transform. When the blue line crosses under the yellow line, that is an exit signal. That is telling me to get out of my position. And it doesn't matter what happens next because I've tested it to know that on average, that helps me secure more money. So I was already in a great profit from my Bitcoin position. As you guys know, I went long on Bitcoin on Friday. Let's go back and see when that was. That was right the 3rd of August, right here, yes. And ended up taking profits right here, right about 30 minutes before the daily candle closed yesterday. So Midwest Attempt says, I will find some for you if you give me BTC. Yeah, I absolutely agree, man. See, what's interesting is the more power that government has, and the more power that government has directly correlates to what you give them to legislate. So the more authority the government has, the more problems we have on a global scale. Governments do not, this is something that a lot of people need to think seriously. Because it is true that when you have smaller groups of centralized entities, you know, global trade and global competition and global, you know, commerce would seem to be on its face, prima facie, easier because you don't have, you know, millions and millions and millions and millions and millions of regulatory agencies, of authoritative bodies, right? And of course, you have millions of companies that are running around in the avenue of the free market, competing against each other and creating the global economy. But they are beholden to a very small number of authorities. I would argue that we don't really know. We don't really know whether global commerce would be improved by a more libertarian society. I know that but I do know this. I do know that it is morally correct to move toward a more libertarian society. And that's all that matters. You know, I was talking with a friend yesterday and he had asked my advice on a personal situation. And I just asked him, I'm like, look, man, he's like, man, you know, I did this and now I'm not sure if I made the right decision, but now I'm like, well, I don't know. Maybe I should just like kind of like not do it. Maybe I should just like reverse my opinion because XYZ might happen. And I just asked him, what was the morally correct thing to do? What was the thing that was right? Not maybe moral is like kind of a thing, but it's important, right? So what was the right thing to do? When I say ethical, like ethics to me means what is the correct way to live to ensure that I have the greatest success possible in life, right? It's a very utilitarian mindset that I have as far as my ethics go. So it is my personal opinion that acting in an ethical manner and behaving in an ethical manner are going to generate the best possible life for me. They are going to give me the most success because that is what I've noticed, right? It's very important to be humble, to be grateful, to appreciate what you have, to be frugal, to invest wisely, to spend your money smartly, to approach your friendships and your relationships like you approach your investments, always searching for quality, always looking for your friends and loved ones to push you and surround yourself with those who are pushing you to do better, always be working on yourself, and treat other people with kindness and respect. That is fundamentally the way that I approach life. A lot of that has to do with how I was raised, but a lot of it is stuff that I've come to on my own. Today's rant brought to you by Ron Paul. Minx looks like MACD. It is a hybrid indicator, just like the MACD, yes. Completely different calculation, but visually, yes, it looks the same. So is the Fisher transform. Where do I find this Minx and what was the other one chart? So Adam, Minx and this version of the Fisher transform are all indicators that I've written and programmed myself. They're available to all the subscribers to the premium trading group. I have indicators that you can use for free. They are on tv.crackingcryptocurrency.com, or you can just look me up on TradingView at Cracking Cryptocurrency. CC EMA, there's lots of indicators that you can use there. pretty easy to target political dissidents as mental health risks. That is possible, man. Yeah, you again, and I think that that's something that people bring up a whole lot, and kind of comes back to the whole idea that the less power that government has, the less they have to legislate, the more we get, the less we give to government and say, hey, take care of this for us, the less problems we have. Big pharma kills more people than they help due to drugs and backed by governments. This is what legalized drugs look like too. You know, hey, so I'm not going to come at you, but I do completely disagree with you. I hear that a lot. Again, a lot from the libertarian community. It's not true, man. You know, America, which has the most advanced pharmaceutical industry in the world, has the highest rate of living, has the best medicine, has the best healthcare. People live in America the longest that humans have ever lived in human history, with the greatest standard of health, with their highest standard of living. So the idea that, like, yes, are there bad things in big pharma? Yes. But the idea that big pharma is bad and that, like, you know, and generally what I hear following that, and again, no offense to you, is, well, if you just adopt this totally holistic and, you know, all these like herbs and salves and, you know, stuff that you drink and blah, 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 all that stuff helps, man. But it's an undisputable fact of human existence that pharmaceuticals and big pharma and the medical establishment that we have, the medical industry that we have, does save lives, like millions of lives every single year. Humans live longer than they've ever lived before, and that is thanks to vaccines, is thanks to medicine, is thanks to antibiotics, is thanks to surgical procedures, is thanks to life-saving drugs. So, for example, my grandfather has a failing heart, is suffering from heart failure. So my grandfather had a device installed in his chest called a VAD. It's a left ventricle assist device, right? That allows him to live. Right? It pumps his heart artificially for him. There's only 10,000 people in the United States who have had that operation done, who have those VADs. Okay. It's very rare. He doesn't have a pulse because he has a device that pumps his blood for him. And that allows him to survive. Now, he has to take very specific blood thinners so that he can survive with that device. He has to have his blood thinned so that his blood can flow through the device. If those, which again was developed by a large pharmaceutical company, if that company had not taken on the risk, the capital risk to develop that drug, my grandfather would not be alive. So pharmaceuticals save lives. I know it's an unpopular opinion, but here's the thing. Traditional medicine has completely revolutionized and changed the way that human beings lived. It is a absolute game changer. Now, that's not to say that holistic approaches to life, which I do adopt, like good, you know, I try to eat healthy. I eat very healthy. I try to drink very healthy. I exercise. I meditate. I do all the stuff that I can to possibly help myself. There's even some like woo-woo stuff that I do, you know, like I drink apple cider vinegar. You know, not going to get into colloidal silver. That's kind of weird to me. But, you know, I try different things. My mother, my biological mother, is very, let's just say, mystic, right? And so we disagree vehemently on many topics. But she makes like, you know, like soaps for me and salves and balms, and I'm cool with it. Like I get that maybe it's helping, maybe it's not. I don't know. It makes me smell good. But yeah, I mean, you know, bullish bear, I guess we're just going to have to disagree, man, because again, the stats are not untrue. They're not. America does have the best healthcare in the world. From an objective, I mean, just from objective statistics, from if you look at who survives the most, who has the best surgical survival rates, if you look at just look at stats of who actually lives, America has the best healthcare in the world. America has the most efficient healthcare in the world. But thank you, Ken. But again, I know that that's an unpopular opinion, and I totally respect your right to disagree with me. But I don't think that you're being genuine when you say that my stats are incorrect, because they're not. Like, you know, we could take the time if you want. It's not really the purpose of the show, but we can pull up the statistics if you want. But, you know, I can come to you with research and documentation backing that. So anyways, where were we? How does a utopian government look like according to you? I don't believe that there is such a thing. I don't think that there is a utopian government. I know that morally it would be better to have a smaller government and less government regulation of many things. I want to see more local rights. I want to see states have more autonomy. Moving forward, I'd like to see the federal government become disempowered of many, many things. I would like to see them basically focus on law courts. I'd like them to focus on immigration. I'd like them to focus on international affairs. But domestically, I would like to see them have less and less and less and less control. I'd like to see that power shift to the states, and I would like to see that power shift to local communities, and then eventually shift us toward a more libertarian and ANCAP type of society where human beings have the right to engage in free commerce, have access to a truly free market, and basically be able to do what they like insofar as they do not harm another individual. Right. I do agree with you there, Ken. The utopian government is like jumbo shrimp. It's an oxymoron. I mean, no, we can definitely have a better society, a more free society, a society that focuses more on liberty and individual rights. But the idea that we're ever going to have something that's perfect, that just doesn't exist, man, because life is struggle, man. Whew, man, it's hot in here. Is it hot in here, or is it just the controversial political topics? Okay, let's get into the 24-hour time frame. So we'd be looking for entry back on the daily. Most likely, we're gonna, if we do get a bullish breakout. Here's what I'm kind of seeing. Here's what I'm kind of seeing. Again, this is delving in the realm of subjectivity. So there's no indication to do anything on the daily time frame right now, except for exit the position. If you were taking the cross under signal on Minx now, then you would be exiting and you'd be pulling more profit out of your trade that you would have taken. About 2% more on the trade. So again, congratulations to you guys who are waiting for the daily. I jumped the gun a little bit. I took off the 12. I just didn't like the way that the market looked last night. So again, always securing profit, always continuing to push forward. Let's see here. Now, so let's go to the 12 and we'll talk about what we're kind of going to be watching on the 12 hour. Looking for a re-entry here on the 12 hour with Minx crossing back above the static line would be a good re-entry. Looking for Wadatar explosion to be printing a rising explosion level, and a green column above would be a good re-entry signal. Fisher transform crossing back above the trigger line would be a good re-entry signal, potentially, depending on what you're using as your continuation indicator. There are multiple examples here to look at. We are staying above the baseline on the 12-hour chart. So overall, price is bullish. Price continues to remain bullish as long as we are above the 12-hour baseline, above the daily baseline, which we are, of course. Now, keep in mind that that is going to give you a shorter reaction time to your movements, because the higher time frames that we are discussing are designed to predict, or show, not predict, but show longer term trends that last multiple days, if not multiple weeks, which is what I'm looking for. I'm looking for a trend on the daily time frame. I'm looking for a signal on the daily time frame that ideally will last somewhat close to a week. That is like a positional, not a positional, but a swing trade anywhere from 4 to 7 days is the ideal trade setup for me. Where I can get in, where I can take profits multiple times on the way up. I can exit when I so choose. That is the ideal situation. We haven't gotten a lot of those opportunities in the altcoin markets, except for to the downside. So there are just times when you do have to look objectively at what you're doing. So, very hesitant on pretty much trading any alt to BTC pair. I've been ignoring quite a few things, to be honest with you, just because I'm able to apply rationality and my own nuance to what I do. And also make my system a little bit more sensitive. There are ways that you can do that, for example. So here's a good example. Potentially, when you're going to the alt Bitcoin chart, raise the sensitivity of your baseline, for example. I find that if you switch to something like a 21, which is available in the CC script, or on the baseline indicator if you're a premium member, if you move that baseline up to something like 21, then you're going to not get as many false signals when you're looking at Alt to BTC pairs. So there are some, again, you guys are going to know all this when you do your own testing, because again, you don't just want to test Bitcoin. You want to test, as I lay out in the course, you have to also apply the testing method to your altcoins as well and make those adjustments as necessary. So anyways, nothing to do on the 12-hour chart here with Bitcoin. Again, when we exited the position, every exit indicator firing, Fisher transform crossing under the signal line, Wadatar explosion printing a column underneath the explosion level, and of course, Minx crossing into static, crossing underneath the noise line. Let's go down to the 4-hour time frame and see what we have over here. The 4-hour time frame is consolidating right above, kind of doing some Bart Simpson through the baseline right now, as we can see. Minx did turn bearish for a little bit, but as we can see here, Wadatar explosion is keeping us out of taking any 4-hour trades, which is good because besides the reversal trade, there was no baseline breaking trending trade to take here. Price has just done some chop, 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 pretty much for on the 4-hour time frame. So pretty much for the last day. So obviously there's some good volatility in here over the 4-hour time frame, but overall, not any good trending signals from the 4-hour time frame. And as you can see, Wadatar explosion is doing a fantastic job of keeping us out of the market. So take that as you will. Now, going back to the hourly, again, there was the 1-hour momentum trade that was taken right here. If one would have entered on the close of this candle, one would have had a 3.45% profit opportunity. So let's look at Quadriga at that point in time and see if we would have captured. We would have captured 2 of 3 take profits on that, and then got stopped out at break even right here on this candle. So that would have been a good profitable trade, pulling about 2.5% ROI on that trade right there. Full risk position size, probably a larger position size because it would have been taken on the hourly chart, i.e. meaning a closer distance to the stop loss. So, what's interesting is that the higher time frames that you guys take a trade on, if you're using our position sizing strategy, you will be taking smaller position sizes. So trade management becomes somewhat of a thing. But the lower time frames that you go down to, you're going to be taking larger position sizes because your distance to your stop is going to be closer. So there's a couple things that you can do. Since you have a higher probability of being wrong on the smaller time frames because you have a higher propensity for falser signals, because you're getting more signals. Of course, you want to be trading a strategy that you've tested on the hourly time frame or the 4-hour time frame to know that it generates good signals, more good signals than bad signals. But still, you're going to need to do something about reducing risk. So either you can reduce your risk percentage. So if you are using 2 to 3% risk on the daily time frame, you could potentially go down to something like 1, maybe 0.5% risk on the hourly time frame is something that I would recommend. The other thing that you can do as well is, you could do something a little bit more simpler, like chop your position size in half. I think that is less objective than reducing your risk percentage. I think that's less. So I think the best solution is reducing your risk percentage. Other things that you can do as well is potentially increase your risk on the daily time frame. Of course, your stop is going to be wider on the daily time frame. So I know some guys that do 5 to 10% per risk per daily time frame trade. For a swing trade, that's the risk that they're willing to incur. The reason why is because the odds that you hit your stop loss, as you guys who are in the group know, the odds that we almost ever hit our stop loss on a daily time frame trade is so minimal. And I've tried to point this out so many times that, when people just look at the ROI, what percentage did price move on the trade? And then they look at, well, if it was a loss and it says it's like a 10% loss, likely that is not that is a much smaller loss that is offset by our gains on our full risk trades. The reason why is because if I take a position size and I'm trading at 2% risk and my stop loss is 2% away or 10% away, meaning that I know that if price moves down 10%, I'm going to lose 2% of my account, right? So if, however, price moves down 2 or 3% or 5% and triggers one of my early exit signals, then I get out of the trade losing half of the money that I otherwise would have. So that's why when I take losses, you might even see that I actually take, I'd say a fair distribution on some months, right? I'd say on an average month, it's 60-40. Again, there are months where I win 40% of my trades and still make money. And there are months where I win 70% of my trades and still make money, and obviously make money. But again, it comes down to position sizing and money management is the most important thing, and being able to get out of losing trades early and letting your winners run. So anyways, take a little drink of coffee here. We're looking at 1247. Okay. Ken D says this is pretty much what he traded this morning. Reduced my risk by moving the stop loss up twice. I figured if I had a break-even trade, no harm, no foul, look for a better spot to re-enter. You know, here's the interesting thing about trading. If you are a break-even trader, you're doing great, because we have to remember that most traders are actively losing money. Most traders are losing money. 90 to 95% of all traders in the market on any given day are losing money, right? And I'm sorry, but those are the statistics. Those are the numbers, and they are accurate. So what we do on this channel is we strive very hard to get people in that 10 to 5% of traders who make money. So there are a couple things here. So remember, if you are breaking even as a trader, you are doing better than 90 to 95% of the other traders out there. And all you need to focus on is reducing your losses, right? Cut your losses down so that you can now start putting money in your pocket. You're breaking even, you're already there. You already have a pretty good strategy. You just have to figure out what is causing you to take the losses that you have. If you can knock off 10 to 20% of those losses, now you're making 10 to 20% profit per month. Does that make sense? Good. Okay, so no trades here on the hourly for Bitcoin. I don't see anything coming in here on the hourly. We are crossing and closing back above the baseline, it looks like. We have about 10 minutes and 50 seconds until this daily candle closes. But as we can see, Wadatar explosion is keeping us out of market. And of course, Minx has crossed below into the zero line. So mixed signals here on the hourly. Nothing a whole lot to do right now. That's interesting. Why is it? Oh, I know. So has there just been that like gray blurb there for quite a while? There we go. I fixed it. Sorry about that, guys. Cryptonomics says, question, as volatile as Bitcoin is, the stop loss on a daily trade would be far away, but doesn't that increase your position loss even if you get out early? Or is it because your smaller position keeps you safe? So no, your stop loss being far, so it doesn't matter if you're position sizing consistently, you're going to be risking the same amount regardless of where your stop loss is, based on where your stop loss is. So if your stop loss is 10% away, you're going to put on a position size that reflects that. If your stop loss is 2% away, you would put on a position size that reflects that. So again, you're still taking on the same amount of risk, you just recalculate your position size. So therefore, if you exit the trade before you hit your stop loss and you position sized with your stop loss in place, then you are losing less money than you otherwise would have had your price had price hit your stop loss. Mr. Ether says, mathematically incorrect, but good advice. Not 100% mathematically incorrect, but close. Let's see here. Ken D says, I'm up 5% in 6 weeks. Could be better, but not too bad while I learn the nuances of the market. That is not bad. That's not bad. Again, that is the pathway to becoming a profitable trader, is locking in those consistent gains over time and then just looking to improve what you do. You know, that is the mindset, the mentality, the growth, the progress that anybody who wants to be long-term successful in the space needs to go through. So let's touch on that cryptonomics question a little bit more. Okay, so let's say that, you know what I really need? I'm going to hook up that second camera over here so that I can do that, you know, where I can draw stuff out, because I don't really know how to do it like Ivan does with the like whiteboard on his computer. Maybe he does do the draw thing. I don't know. So if your stop loss is 10% away, okay, so let's just say you have an account balance of $1,000. Okay. And you are risking 2% per trade, which means you are allowed to lose $20 per trade. okay? Because 2% of $1,000 is 20 bucks. So you are allowed to lose $20 per trade. So if you put on whatever position size you're going to put on is going to be based on the distance to your stop loss and that number. So you need, if your stop loss is 5% away, you would put on a position size that if that position size were to lose 5% of its value, you would lose 20 bucks. If your stop loss is 10% away, you would put on a position size so that if you lost 10%, you would lose 20 bucks. So in the 10% position size, because that math's easy to do right in my head, that would be a $200 position size. So if you have a $1,000 account balance and you're taking on a trade and you're trading at 2% risk and you're putting on a trade where your stop loss is 10% away, your position size is going to be $200. Because your $200 position size, if it loses 10%, you lose 20 bucks. That's your acceptable risk level per trade. And if your stop loss was twice that, so say your stop loss was 20% away, so you're trading an altcoin, then your position size would be half of $200 because 20% of $100 is 20 bucks. So you would be trading with $100 instead of 200. So it's the same amount of risk. You're still losing the same amount of money. That's why the distance to the stop, it doesn't matter how tight, or I mean, it does for how successful you want to be, but mathematically for what you're losing dollar terms, it doesn't matter whether your stop loss is 50% away or 5% away, as long as you adjust your position size to reflect that. How much does commission and slippage eat into my returns? Not very much at all. Not very much at all. Trading cryptocurrency has the lowest fees, no commission, anywhere. And same with Forex. You pay a spread. That's about it. And I buy my stocks on Robinhood. So slippage is a thing. Slippage is a thing. So capital concern is a real thing. So with a larger account, you do need to be careful that you're trading liquid markets. That's why most larger capital traders are going to be trading. That's why I recommend trading on something like ByBit, because there's a lot of liquidity there. So you don't have to worry about slippage. This is why I don't recommend that people trade on jank exchanges, because even with Binance, sometimes there are slippage issues with altcoin markets, especially low sats. Cryptonomics says, I follow that, but trading on ByBit 10 to 50x, that's not the same math. It is exactly the same math. Leverage doesn't matter. It's only your position size. So just do not use leverage when you're doing your calculation. All that leverage slider means is how much you're actually putting up for the trade. The position size is all that matters. It is the same math. I've made many videos on this, buddy. Please go watch them. I have a video in the Trading Crypto 101 about leverage. You are wrong. I get this question all the time. Leverage, it is the same math. It is the exact same math. Leverage has nothing to do with it. The position size is all that matters. Your position size is the only thing that matters when determining how much you're going to lose. Doesn't matter if you use 25x or 10x to put on $1,000. $1,000 is $1,000. All that leverage slider means is that you put up, say you have 10x and you put on $1,000 position size, it means you put up $100. You put on, if you use 25x, it means you put up 25% of that. Or not 25% of that. Brain is not working with math. Your position size is 25 times less that. Let's see here. Ferguson says, do we have an Adam and Eve bottom shaping up in the 1 hour? So 500. We have a little bit of a V bottom here, back up to the baseline, and a more rounded retest of support, and then a sharp stab down. So this would be 1, 2, 3, 4 tests of support. Obviously, there was if you're looking at support and resistance, I would be looking for a nice clean break of 12,250 if you wanted to take a momentum trade. But for me, I mean, I'm going to be able to enter the trade down here if we do get bullish momentum, because Wadatar tells me where the momentum is. It is 12:57, and you guys know what that means. It means we need to talk about ByBit. So as a professional trader, I am often asked what metrics I use to evaluate an exchange, and I always say the same thing. When I evaluate an exchange, I look at their security, their customer service, and their ease of use. And the exchange that I trade my Bitcoin futures on is ByBit. I do not trade the majority of my funds over on BitMEX anymore. I used to for a very long time. The access to liquidity was fine there, but I did not like all the negative activity that I saw on there, and I did not like the idea of system overload. I've never had that issue trading on ByBit. I've never not been able to get filled, and the big determining factor for me was their customer service. So I highly like ByBit. I highly recommend them. They are honestly, I mean, I say this just because it's the truth. It's the best experience that I've had trading cryptocurrency. I really enjoy ByBit. So you guys can check ByBit out for yourself at bybit.krakencryptocurrency.com. There is a link down in the description. If you use that link, ByBit will give you up to $60 to test their platform out, and you can decide for yourself whether you'd like to trade on there or not. When we come back from the break, guys, we are going to talk about the Binance KYC hack, what you need to do to protect yourself, if this is valid, if this is real news. We're going to go through all the evidence. We're going to point it out. We're going to talk about what this is. If you don't know what I'm talking about, then definitely stay tuned. You don't want to miss that. We're also going to talk about Walmart coin. We're going to talk about the stance that the United States and other first world countries, the attack vector that they would use to attack cryptocurrency should they decide that cryptocurrencies do pose a legitimate threat to their central bank fiat. So going to break all those ideas down, break those concepts down, and we're also going to take a look at your user submitted chart requests. So let me know in the chat if there's anything that you guys would like me to look at chart-wise, and I'll do my best to take a look at that when we come back from the break. Don't go anywhere, guys. I'll be back in just a moment. Welcome back, guys, to the show. Let's move this microphone down just a little bit. Thank you so much for hanging in through the break, guys. If you're just joining us for the second hour, we've got some fantastic stuff we're going to break down. The first thing we're going to start off with is the Binance KYC hack. Obviously, this is all pretty much anybody's talking about, and we're going to break this all down for you. We're going to talk about what is factual, what is not, does this affect you, and what you can do to protect yourself. If you are joining us for the second hour and you missed the first hour, we did a full Bitcoin breakdown and analysis. We also talked quite a bit about some controversial subjects. We talked about healthcare. We talked about substances and its legality and legislation of substances, and we talked about libertarianism. So make sure you guys go check that out if you haven't. You of course will be able to find the timestamps after the show is done and published here on whatever platform you're watching us from. So let's get right into the news of the day. And this is the Binance KYC hack. So Binance is investigating an apparent leak following a large data dump of customer KYC data released to a public Telegram channel late yesterday. Thousands of Telegram users poured into the channel, hoping to not see themselves among the cache of images showing a smiling face holding up passports and Binance.com written on pieces of paper. Now, according to CoinDesk, the alleged hacker supplied them with hundreds of photographs, and they claim that they have identified individuals who have found their pictures among those distributed. So, according to CoinDesk, this information does seem valid. These are legitimate leaks. These are actual people whose information is being released. The hacker claims they have 60,000 some pictures and will release them over time. Now, Binance has made an official response to this on their blog. This is the statement on the false KYC leak. Let's actually go over to the, let me find the CoinDesk article here real quick. Here we go. Trying to find pictures of I found them on Twitter. So here's the CoinDesk article. You guys could just go search Binance KYC hack on Twitter, and you'll be able to find screenshots of the Telegram channel. So what we do know is that extortion demands, according to Binance, were made to Binance. So the hacker contacted them and said that they wanted 300 Bitcoin as a ransom. Otherwise, they would not. Otherwise, they would release the information to the public and to news outlets. So Binance said, "We're not going to continue this conversation. Screw off." And then the dump began on the Telegram channel. Now, Binance, in their public statement, has offered, according to their official blog, Binance has offered a 25 Bitcoin bounty for help in thwarting the hacker. Binance claims that the data did not come from their server, as the images that they have reviewed did not bear the digital watermark that would be there had it been lifted off of their server. So the current speculation is that the leaked data is in fact from an earlier and publicly known hack of KYC data in 2018, which involved a third-party KYC validator, which Binance admits in this blog statement they did contract out KYC validation in February of 2018 to a third-party KYC company. So obviously what this looks like is that Binance itself did not get hacked, but that Binance did contract out to a third-party KYC validator, and that validator's server or data got hacked. We have to speculate here that this is, as far as we know, moving forward, this does look like a legitimate data dump, especially if CoinDesk is to be trusted, from what they've said that they have actually been able to independently verify and validate. Now, I haven't spoken to anybody personally that says that they did find their personal information leaked, that they did find a picture of themselves. If you guys know of such a thing, let me know. That would enhance the validity of these claims. Now, this whole debacle highlights the issue with KYC. and consumer data protection in this era. So between the Equifax hack and last week's Capital One news on Capital One's private information being hacked, current financial regulation and customer data management is woefully underprepared for a cyberpunk future where all of this information is flowing around. Third-party KYC companies are like a gift for criminal hackers. Now, I spoke to the guy that I like to talk to about internet security. He's one of the best in the business that I'm aware of. I talked to him this morning, and his remarks are that the best solution to KYC is to have no KYC. This ensures that there is not a pool of sensitive information that can be breached. Unfortunately, since that does not seem like a likely solution to happen anytime soon, then the next best practice would be to only have that data on a hot site, basically with inbound access, until a customer's identity can be validated. Then that information should be moved offline to an air-gapped site that does not have inbound access for security. Very similar to only keeping the funds that you need to use on a hot wallet and the rest in cold storage. So if this is affecting you, if you have found your personal data on the Telegram channel or elsewhere, or if you feel that your personal data has been leaked, you need to take the necessary precautions of any potential identity theft, because this could be your social security number, this could be your birthday, this is all information that can be used to steal your identity. So the first thing that you can do, and this is general identity theft information, so the first thing that you can do is put a fraud alert on your credit reports. This puts a red flag on your report and notifies lenders and creditors that they need to take extra steps to verify your identity before extending credit. To place a 90-day fraud alert on all 3 of your credit reports, you only need to contact one of the reporting agencies, whether that be Equifax, Experian, or TransUnion. Now, if you're not planning to do anything credit-wise for 90 days, you might even want to consider placing a security freeze on your credit reports. This will prevent anyone from accessing your credit report at all, meaning if you or someone fraudulently posing as you applies for credit or a loan or try to create an account, they'll be instantly denied. Now, there are steps in place to temporarily thaw your account to process a legitimate request, but the security freeze, as opposed to the fraud alert, is a safer option, does provide you with a higher level of security. Now, you'll also want to contact your bank, potentially putting a red line on your account. Now, the red line on your account, and the following steps, you really don't want to do until you've actually become a victim of identity theft. But should you find unauthorized charges or identity theft behavior on your credit report, you'll want to file immediately a police report. That's the first thing you have to do. After that, you want to contact the Federal Trade Commission and file an identity theft affidavit. If your social security number has been compromised, you'll also want to contact the Social Security Administration and the IRS. Now, you should already be in the habit of doing this already, but if you're not, you need to make a habit of reviewing your bank and your credit card statements every month. Watch very closely for any unauthorized transactions, anything that looks fishy. I also highly recommend you guys go and sign up on something like Credit Karma. That's what I personally use, and review your credit report and score monthly. That's what I do. I'm sure there might be better websites out there, but I really like Credit Karma. It's simple. I use it every single month. When I began saving and investing, my credit score was actually pretty bad because I made poor choices in my very young years. But over time, I paid down all my debt. I paid off my student loans, and now my credit score is very, very good, and I can call the bank and get any loan I want for pretty much anything. Now, it does take time to get there, and I know probably some people watching this show, watching this channel, are not in the best financial situation insofar as their debt, insofar as their credit, and I know a lot of you guys are. But if this does apply to you, if you are in that situation where you're in debt and you don't really know where to start, you have to take this into account. If you get serious about your debt, then starting now, once you get everything in order and get your budget and get all your expenses figured out, then every single day from here on, it's going to get better. This is now the day that you decide to take your debt seriously is the worst day that it will ever be, because every single day moving forward, things will get a little bit better every single day. So, it takes time to get there. But if you can get on the path, if you get serious about paying off your debt, then you can get there in 3 to 5 years. But you have to start now. If you see any unauthorized accounts, any new or suspicious activity, immediately investigate it, contact your bank, your financial lender, and lock that down. Identity theft sucks, and it is a sticky, long process to prove that you're a victim, get it sorted out, and most likely not get compensated. So when I was young, there was a girl that stole my checkbook and wrote a bunch of checks, which bounced my account. I was young. I didn't have a whole lot of money. Now, I did report this to the police as soon as I found out about it. She did get arrested, but I still did have to deal with the mess of the debt. So the first thing that I had to go do was I had to go get a police report. I had to send it to all the creditors. I had to have lots of lengthy back and forth conversations on the phone and mail exchanges, but eventually I did get it all taken care of. But there was about a year where this negatively impacted my credit. And had I needed to do anything serious credit-wise that year, I would have most likely been out of luck. Now, the Fair Billing Act, which is federal legislation, does cap your liability for unauthorized credit card purchases at $50. And many credit card issuers do lower that to $0. If someone steals your credit card numbers and not your card, you're not liable for anything. So take this very seriously. These are all practical steps that you need to take. It does, to the best of my knowledge, seem like this is a verified data leak. It does seem like this is not a new hack, but it is a new leak of the same information that we knew got hacked back in February of 2018. So whether this information was purchased by the hacker on the dark web, or whether he actually did his own black hat activity and got a hold of the information or the data dump somehow, somewhere, all we know is that this is troubling. This is a bad thing. What does this say about Binance? You know, we have to obviously take this very seriously. The links, so Carl Roberts is saying, do I have a link to the KYC hack list? I don't. We can do some, again, I saw the link. So here's my personal thing. I saw the link to the Telegram channel, but actually let me check my analyst Discord, because I sent a message and asked my team and let me see if I've got that updated link. Okay, yeah, so the Telegram channel has been deleted. I do have this confirmed coming in from DaVinci now. The Telegram channel has been deleted because I tried to use that Telegram channel link myself this morning. Most likely somebody has compiled that data, maybe not. That would be a lot of scraping to do to take and save all those photos, but I'm sure somebody did do it. Now, accessing that information, I'm not sure. We don't have a verified list of the individuals who have been leaked. A lot of news outlets are not going to be able to publish that information, or will choose not to publish that information, basically due to the exact same thing about protecting consumer identity and data. They don't want to put the same information out there that was already leaked. But so to the best of my knowledge, the Telegram channel, the original Telegram channel has been deleted. We're just going to have to kind of wait and wait to see what pops up. Now, if you guys come across anywhere where this information has been reposted, please send it to me. I will do my best to get this information in the hands of the people who need it the most. This is, it's troubling. It is definitely troubling. It's definitely troubling. Now, what can we take away from this as far as Binance? Should we not be trading on Binance? So here's my personal. So we're stepping into the realm of subjectivity. I think that Binance really shit the bed on this one by trusting a third-party validator of their KYC. That is obviously, as we know now, from what we can gather, is where the problem came in. Was not Binance itself being hacked, but Binance relegating that data to a third-party server. From what I understand, they are not doing that anymore. They only did that one time. That is the one time when they got hacked. This is not a new hack. This is the same hack that we already knew occurred back in February of 2018. So, am I going to come on here and say, oh, you can trust Binance, the funds are SAFU? I'm not going to say that, but I will say this, right? This absolutely sucks. But do I think that it means you should not trade on Binance? I mean, where else are you going to go? Binance has the best liquidity, the best access to the best access to the altcoin markets. A lot of Americans are going to get kicked off the platform that have already done KYC. So basically, Americans are just getting the shaft on this deal, because not only are they potentially have they potentially had their personal KYC data leaked, they're also not going to be able to enjoy the benefits of trading on Binance in the first place. Do I think that Binance is likely to commit this again? Most likely not. I doubt that they will trust a third-party KYC validator, but they might. So again, you have to understand the risks that you are incurring. I think that by taking those precautionary steps and by reviewing your personal information and your credit score and taking your personal information seriously, I think you can mitigate a lot of these steps if you can do your absolute best to secure yourself. But that is an attack vector when you reveal your KYC data, your private data and information to an exchange. Now, me personally, I've done KYC with things like Coinbase. And, you know, is there risk there? Yes, absolutely. And that's why I think something that you can do as far as keeping your funds safe is by taking your cold storage for yourself. Keeping your funds on an exchange is not the same as keeping your funds in cold storage. Do I think that Coinbase for exchanges is pretty much as safe as you can get for convenience? Yes, I do. But it is still not the same level of security that you're going to have by keeping your funds in cold storage. And this is another reason why I prefer exchanges like ByBit. I prefer exchanges where I have access to leverage. I use leverage for the way that it is intended, and that is for you to keep less funds on the exchange than you need to trade the correct position sizes while securing the majority of your capital in cold storage. I highly recommend that you invest in a Ledger Nano. As you guys can see back there, I have a Ledger Nano S and a Ledger Nano X. I use them for different purposes. I've never had an issue with a Ledger Nano. I quite like them. Trezor is also a good alternative as well. I just prefer the Ledger Nano myself. And again, I also have my own cold storage that I've set up via the use of Armory. That's what I did. Now I have migrated a lot of those funds over to the Ledger Nano S, the Ledger Nano X. But I still have quite a bit of Bitcoin in my Armory. And again, that is my investment. I use one of those for the purposes of my trading capital. So occasionally I have to move back and forth if I want to move into dollars. And I do use Coinbase for the purpose of doing that. Of course, I use ByBit for the purposes of taking short positions and hedging my entire trading capital balance. Now, let's see here. So this sucks to hear. I will continue to keep you guys updated on this as I receive information and news on this. Again, take this very seriously. If you are potentially affected, take all the precautions that I talked about. And you're going to have to make your own decision at the end of the day, whether or not you want to trade on Binance. The damage is done. Do I think Binance is likely to repeat this? No, but this is another black mark on their record. I think that Binance has done a lot of things right. I know that they're unpopular in the space, but I think insofar as, we live in an unperfect world, right? This is an unperfect world. This is a new emerging economy that is trying to get away from a lot of the traditional things, and that comes with unfortunate risk as we try to merge the crypto world with traditional finance, right? And for the traditional finance to take the best things away from crypto and for crypto to take the best things away from traditional finance. I know that's an unpopular opinion, but I do see over time us continuing to improve the way that we do global transactions and commerce, and the entire world improving by moving to a safe and secure store of value and global payment processing systems such as Bitcoin, which I do think is inevitable. So, but in the interim, as traders, it's risky business, man. You do have to take precautions to protect your Bitcoin, to protect your funds, and to protect your personal identity. So again, the decision to KYC is a personal decision. You have to realize that when you do KYC, you are exposing yourself to another attack vector insofar as your personal identity and credit go. So take that with a grain of salt, and you have to, at the end of the day, measure the risk to reward and make your own decision. Okay, let me review the chat here on this a little bit. Theoc says, I wouldn't share that, to be honest. I do kind of share your concerns because I don't want that data to get out there as much as possible. It says it's everywhere if you know where to look. Don't want to sound like a smartass, but there's plenty where you can access. Not sure if it's good or bad to share, though. So, it's kind of that dual-edged sword where if the information's out there, so this is my take on it. If the information is out there, then the dangerous criminals are already going to have access to it. And I think that it's going to be helpful for people to know if they're affected or not, because if they don't know that they're affected, then they might be more lax with their personal security and taking some of the precautions that I talked about. If they know that their personal information has been leaked, then they're going to take the necessary precautions and get serious about their security. And it sucks, man. Yeah, he says, I'd say if you signed up during the time of the hack with KYC, late 2018, go better safe than sorry and red flag yourself. I agree. I think it is definitely better safe than sorry to do that, especially if you're not doing a whole lot of, purchasing real estate or making big investments or taking on new loans. And again, you can red flag yourself, which makes life inconvenient. But there are processes to unthaw your account to allow temporary or legitimate requests to go through to your credit report. Okay, so going to our next story, which is going to be about North Korea. Okay, So, according to the United Nations, the DPRK, which is the Democratic People's Republic of North Korea, which is like an oxymoron, like jumper shrimp, is one of the villains in the internet's rogue gallery. So, North Korean-sponsored cyber criminals are operating like pirates in the crypto space, and their looted treasures are funding the regime's weapons of mass destruction programs. So speculation points to the fact that it was actually North Korea that was responsible for Japan's $500 million hack on the exchange CoinCheck. That was reported on by us previously. Now, pretext. So think about this. So basically this article and what we have coming out of the UN right now is looking at 35 reported instances of DPRK actors attacking financial institutions, crypto exchanges, and mining activities designed to earn foreign currency in around 17 nations. So this is a way for North Korea to generate income in ways that are harder to trace and subject to less government oversight and regulation than the traditional banking sector. Now, where I want to take this is as a pretext for Western intervention into crypto. So we have the axis of evil states such as North Korea, China, Iran, Russia, Venezuela being commonly associated with cryptocurrency or Bitcoin in the news and the media. One could easily imagine a future where escalating conflict with the East leads to severe crackdown on rogue states' ability to raise money via crypto, which would mean, again, you have to realize that the reason why it is easy for states like North Korea to engage or utilize something like cryptocurrency to generate funds is because the system is easy to use and liquid. So the less easy or the more problems the government gives us with accessing the system, sure, it gets harder for them, but it also gets harder for us to utilize the system in a legitimate manner. So believe me, this is definitely the George W. Bush method that they will attempt to take. And by they, I mean governments, first world governments around the world, if governments decide to try to crack down on cryptocurrency in totality. Whether or not we have that repressive movement from our own governments, ideally the United States, or specifically the United States, or something more logical and conducive to the growth of humanity and societal progress, really depends on you guys watching the show. It depends on your effort. It depends on your effort that you take with spreading the knowledge and information about cryptocurrency. The more mainstream and publicly acceptable cryptocurrency and Bitcoin is, then the more that it's normal and better than central bank fiat. So the more that it's normal, the more that people support cryptocurrency, the harder it becomes for governments around the world to make us buy into a campaign to crack down on something that we think is good. It's difficult to justify warfare when it's easy to justify warfare when it is a publicly perceived threat on behalf of the country, for example. But if Donald Trump came out tomorrow and said that, hey guys, we're going to go to war with Walmart, I doubt that anybody would buy it. Except for maybe a few like really diehard Costco shoppers. But it'd be really difficult to sell that war, to sell that threat to the American people. And because the war would not receive public support, it would not be successful. Keep this in mind. Everybody thinks that government is a static thing, and that's generally people who haven't studied history. But pretty much all governments are just one bad war away from being overthrown by their populace. This is how many governments have gone down in the past. Governments are not as static as most people think that they are. All regimes know that at any moment, the people could rise up and off with their heads. And that is why bad regimes, so regimes that are repressive on humanity, they focus on suppressing individuals and stealing their sense of autonomy and power. And I would argue that better regimes, like the United States government, focus on a careful balance of keeping their citizens just okay enough with their bullshit that the American populace allows them to continue doing their thing. Because again, at any moment, we could rise up because there's more of us than them, right? So if you do get a mass uprising, then governments don't stand a chance. And you have to understand that when you do get a massive uprising, this is not the world of Metal Gear Solid 4. You are going to have your army start, what's the word I'm looking for? Not want to enforce your war. When it comes down to slaughtering your own citizens, I think that the army is generally not going to be doing that, at least in the United States. So I wanted to talk about this, not so much, insofar as like North Korea or what can we do or blah, 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 who cares? But I wanted to talk about this as a potential pretext that you should be aware of in your own thinking and in your conversations with other people, to be aware of that this is the attack vector that governments would use to launch some sort of global campaign against cryptocurrency. It's used by criminals, it's used for child pornography, it's used by terrorists. We have to have KYC. And this dovetails nicely with the fact that we just talked about the dangers of KYC. And this, although it could be taken as a reason why KYC would be good to prevent the funding of terrorism like this, in my opinion, it is actually a nail in the coffin for KYC because that is, again, going back to the exact same thing of legitimizing the attack vector or the justification that governments would use to justify their kind of global war against cryptocurrency. So take that as you will, and let me know what you guys think. Okay. The last thing that we're going to talk about today is Walmart coin, guys. It is here. It is here. So another rival in the future corporate coin world has been revealed. Walmart plans to launch a new token, which can be described as a dollar-pegged stablecoin for use in a next-generation gift card backend. Payments for some of their blockchain solutions, or excuse me, patents for some of their blockchain solutions have been filed. The current speculation is that Walmart coin will be warmly received by US lawmakers in stark contrast to Facebook's Libra coin. Now, although Walmart's aspirations from their filings seem to be more domestic, it's undeniable that it will likely face less hurdles in getting to the market than Libra. Now, what are some good things about this? Well, Walmart is huge. So having a currency pegged to a stable store of value, Walmart coin could provide a fee-free or fee-minimal place to store wealth that can be spent at retailers and, if needed, easily converted into cash. It can help provide banking to low-income individuals who don't have enough credit or, really banking history to feel comfortable or have enough capital to justify having a big boy, account. Eliminating credit cards. So features suggested in their broad filing for their patents are the use of biometrics like fingerprints and eye prints to act as credit or credit initiators. So as I've said many, many times, guys, we need to be prepared for the world of corporate coins. They are coming and they're not likely going to go away. And the poisonous nectar here is that they will make life very convenient. But the problem, as I talked about on Monday, is privacy. These companies are going to have control over their own networks. They're going to have control over their own payment systems, and they're going to have access to all your personal purchasing information. So as I talked about on Monday's video, when I talked about the moral case for the Lightning Network, Bitcoin and the Lightning Network will help keep our purchasing information private. They allow us to have control. Just a second here. Oh, shoot. Okay. So as I talked about in the video on Monday, when I talked about the moral case for the Lightning Network, Bitcoin and the Lightning Network in particular will help keep our purchasing information private. They allow us to have control and ownership over our own data. Putting the power in the hands of central entities like Walmart does not fill me with confidence. Will it make life convenient? Yes, in the interim, in the short term. However, in the long run, it opens up such a dangerous Pandora's box for it opens up a dangerous Pandora's box of centralized control and power. Corporations are coming for the banking industry now because cryptocurrency have opened the doors. And we need to be aware that the danger to us comes in the danger to our private information. Again, this dovetails nicely with just talking about what happened with Binance, right? You do not want your private information at the whim of any third party. Now, it is easy to actually look at this idea of a huge government-sponsored corporate coin. It's easy to see a future socialist state of America where Walmart has near exclusive supermarket rights in our country, and the US government grants you the right to shop by topping up your Walmart crypto card every month. Something like the new Blue Deal. So definitely things that concern me, definitely things that I do not like, definitely things that I've talked about for a long time, and that I am personally, as I am trying to help change the world, trying to make everybody aware of so that they know what to try to avoid, what to try to talk about, and what arguments to use when explaining to people why it is Bitcoin and the Lightning Network that are the revolutionary technology that need to be adopted, and not any of these stupid corporate coins. They are a thing. We're going to have to deal with them. I do see them being used. I do see them being popular, but we need to continue to explain why it is control of our information, why it is control and access to our own funds, being your own bank, why that is the revolutionary technology that will push mankind forward, and not the kind of current status quo 2.0 that corporate coins offer us. Ricky Thompson says, I went to a party on the weekend. Doomps, 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 doomps. Met 3 big wigs from New York City, one who is high up in KPMG. He doesn't know much about crypto, like stocks, as that is what he knows, and the other 2 are the same. Sounds like they were not interested in learning about it. Well, that might be true. Again, I'm not. That's obviously true because you're telling me a story of your own personal anecdote. But I will say this. There's a whole lot of people that still are woefully misinformed and just ignorant about the way that Bitcoin works or what it is or what cryptocurrency offers humanity. And it is this is kind of what I said. It is our goal. It is what we need to do to help educate people so that they can make their own decision. Because there are, and in the world of finance, there are a lot of people who are interested in it. I mean, I've talked to so many prop traders, managers that I know from the old days that are extremely interested in cryptocurrency, and I'm the one they call. Not everyone. It's not like I'm the go-to guy for the world. But again, I have quite a lot of my own personal contacts call me because I'm the crypto guy. What's worse than a corporate coin? One that has the official blessing of big government. You are right about that. That is scary. Okay, so let's get back over to the markets, and let's break into our Forex analysis of the day. We'll go look at the Forex markets here. We'll go to the daily, and we will give you guys an update on what's happening in Forex. So we'll start with the Aussie yen. All right, Aussie yen putting in a pretty nice big long price tail to the downside. We don't have any invalidation of the bearish trade yet. Actually, interestingly enough, Minx did cross up into the static level, so one would have been exiting their position yet. However, Fisher Transform and Wada Atar are still printing bearish momentum, falling but not giving you the exit signal yet. So potentially an opportunity where you're now scaling out profit and you're more toward the side of being completely out in profit on your Aussie yen short and still not looking to put on any positions because that would be a reversal trade. Crypto beginner, what's going on, man? I am well. Aussie Kiwi putting in a big trade to the upside on the Aussie Kiwi here today. But no confirmation to take any bullish trade. We still have Minx below the 0 line. Obviously, all indications to be exiting any short position that one might have been in. We talked about the Aussie Kiwi short right on the close of this candle and the big movement to the downside that we did get after that. Obviously hitting one of probably multiple take profits on that. And on the same resulting candle getting stopped out at break even. So let's go to our baseline and we're going to put on our Forex baseline, excuse me. All right, now let's go look at the Aussie dollar. I am short on the Aussie dollar. There's no reason to be exiting the trade. We do have Wada Atar explosion printing a column below the explosion level. So I will be scaling out some profit today. And waiting for my primary exit signal, whether that comes from Fisher or from Minx. I already scaled out a little bit of profit on Minx crossing above. So looking for that nice confluence, I'd say I took about a third of remaining positions. I'll take another third now, and I'll wait for the Fisher to cross to take the remaining third. Canadian Swissy continues in its bearish momentum to the downside. I see no signs of this stopping anytime soon. Is it the opportunity to enter into a trade? No, and definitely, and not honestly an opportunity, not really an area to take profit, really. Canadian yen. Very similar to the Canadian Swissy, continuing to move to the downside. I don't see any end to this yet. There is no exit signal. Actually, sorry. Minx is going to be crossing above the static level today. So an opportunity for you to scale out some profit on where you're at. The Swissy yen. The Swissy yen would have given one a reversal baseline bounce entry on yesterday's candle. Wada Atar explosion is keeping you out of all trades. I do not see a re-entry yet. One should definitely be out of their short trade on this candle when we had both Minx and Wada Atar signal the trade. Euro Aussie continues to be a good long. Let's see what we got going on here. Minx does not even cross back within the static level. So regardless of what this candlestick is doing, I would still be holding this long open. I wouldn't be taking any profit yet. The Euro Canadian was a long on this candle 2 days ago. So that was a valid long. One would have definitely hit one of 3 take profits now. I don't see any stop to this. There is no exit signal that we see. So I would continue to hold this trade open. The Euro Swissy, we do have exit signals. I would not be in a position on the Euro Swissy. We would have been out yesterday, scaling out a third, scaling out another third today. Let's go to the Euro Kiwi. As you guys can see, I am long on the Euro Kiwi. Took my first 50% profit here and continuing to let this winner run with my stop loss at break even. I don't have any exit signal yet, so I'll continue to hold the Euro Kiwi long. Same for the euro pound. I would be out of a long position. Excuse me. I would be 2/3 out of a long position on the euro pound. We did get the exit signal from Minx. We got an exit signal from Wadatar, waiting for Fisher to turn under, which hasn't happened yet. So I would be having a very small position running to the upside on the euro pound. To the euro yen, I would not be in a position on the euro yen. Let's go look at the big one, the euro dollar. Still no valid long signal from the euro dollar yet. I would still be waiting for more momentum. It's just not there yet. Looking at the pound kiwi. The pound kiwi does look interesting today, but it is not a valid long signal. We will wait and see what this looks like, but it is getting pretty close to be going long on the kiwi pound. The kiwi CAD, or the pound kiwi, sorry. The pound CAD, I don't see anything here. Obviously, there is a reversal baseline bounce in the cards. Wadatar explosion is keeping you out of trades at the moment, though. Pound Swissy, I would be going ahead and being, again, 2/3 out of the position as we talked about. Price is moving down. We've got the exit signal from Wada. We've got the exit signal from Minx. Fisher has not crossed to the upside yet, so I would have a small portion of this position left open. Exact same thing for the pound yen. Looking at the pound dollar, I would not have any position in the pound dollar. Kiwi dollar, I am still short on. Let's see here. I haven't gotten any exit signal yet. Let's see here. So I did get the exit signal from Minx, so potentially I'm going to scale out 1/3 profit tonight on the position that I have left open. I'll go ahead and scale out 1/3 tonight, so I'll circle that so that I know, and I'll continue to hold this position open until I get stronger exit signals. The Kiwi CAD, I did actually get the exit signal, so I did close the Kiwi CAD yesterday. Took profit on that position. It was down here. And I wish I would have held that open because price did move to the downside, but that's okay. I held on those trades on other assets. Just a good place to start scaling these profits out in these long-term Kiwi shorts that I've had open for about a week. Kiwi Swissy, again, I continue to hold that trade open. Minx is crossing up into the static, so I'm going to scale out some profit on the Kiwi Swissy tonight. Let's see here. Same for the Kiwi Yen. I'm going to scale some profit out on the Kiwi Yen tonight. The dollar CAD, I would still continue to hold that long position open with the portion of your capital that you'd have left. You did get a exit signal a little bit from Minx here on a previous candle. So right around this area, I would have been scaling out some profit, but still holding the trade open. The pound Aussie, I talked about this at the very beginning of the show. I went long in the pound Aussie yesterday. Price did run up and hit my 50% take profit and then pulled back and hit my stop loss. So I made quite a bit of, again, a very good trade. This is what pushed my account balance up 10% plus. Again, on top of everything previously for the month of August, just in the first week. The dollar Swissy, I am short on the dollar Swissy. Continue to hold this open. No exit signal yet, so I will continue to hold this trade open. I've already taken 50% profit, and I'll begin scaling out my profits on the rest as I get the signals to do so. Dollar yen, exactly the same thing. Looking at the Aussie CAD, I would be out of your short position. You should have been out yesterday. Fully out on today's candle close. If you did have a short position held open from this area right here is where you would have been putting on your initial short on the Aussie CAD. And there's nothing to do right now. Aussie Swissy, nothing to do. I would continue to hold the short trade open. I would be scaling out a third profit on your Aussie Swissy short tonight and waiting for more confirmation. And the dollar yuan. The dollar yuan is I would go ahead and scale out a third profit on your long trade right now and wait for more signals to scale out more profit. So that's about it for Forex. Amazing volatility. Forex volatility is going to increase. Forex trading is going to be excited, especially, and I think one of the big contributing fundamental reasons for the Forex markets being so volatile is economic uncertainty, because we have to understand when people feel economically uncertain about the markets, the stock markets, bonds, and things of this nature, well, mostly the markets, the stock markets, people flood to what they consider as safer stores of value. And this has always been currency. This has always been gold. This has always been bonds, and cryptocurrency is now on the new rise. I think the global uncertainty is a huge contributing factor, and I think that we are going to continue to see increased volatility and interest in the Forex markets, in cryptocurrency, in precious metals, and in bonds as long as that continues. Now, I don't invest in bonds. I know that there are interesting bond investing strategies. They just don't fit into what I want. I prefer to invest for dividends in stocks. That is how I do things. And I prefer to invest long-term in growth assets like Bitcoin and like precious metal, as well as real estate. So that is my personal strategy as far as that goes. Not a bond investor, but not knocking you if you are. There are good strategies to invest in bonds. Very kind of unique, nuanced ways to invest in bonds that I know that do work and are successful when applied appropriately. Now let's see here. So, I just want to point out that, at the beginning of the year, I think that the malaise that was plaguing the Forex markets, I don't think that was difficult to noodle out why that was. I think it was very easy to noodle out why that was. And I think the reason why that was is because the stock market was performing so well. Everybody was all in stocks during the time span. The volatility was in the stock market. So you have to understand that worldwide capital, as far as investment in the markets go, kind of moves from liquidity to liquidity to liquidity. And that's when you see those markets burgeon up. So there are good reasons why looking at global liquidity, why looking at how liquid a market is and looking at where capital is going and basing a fundamental idea around that can help your trading out. Again, that is discretionary position sizing. That is nuance that can be applied to an if this then that strategy. It all comes down into what you can test. Because if you can't test for it, then it's completely speculative. Then you can't really apply it to a trading strategy, in my humble opinion. And that is one of the reasons for my success. That is why I am so successful with my trading and what I teach, because I don't bring subjectivity in. I just trade the technicals. Okay, let's see here. So for Forex, I use a 21 exponential moving average as my baseline. What are my thoughts on FedCoin? I haven't really heard or seen any legitimate information on this right now. So if you guys kind of hit me with some, I'd be happy to research it. So I'm going to scroll up and take a look at your user submitted chart requests. Elijah Finch asking me to look at MCO USD. All right. Let's look at the weekly on this bad boy. So on the weekly, we're looking pretty bearish. We have violated the baseline to the downside. An object in motion tends to stay in motion. As we can see here, when price does violate the baseline, it typically continues to move in that direction for quite a while. We need to switch over to the crypto baseline. Sorry. You can see much better results now, much earlier signals. We did violate the baseline over here on this coin. We are now on last week's candle close. We actually got a confirmed short signal to take price to the downside. Of course, Minx would have gotten us in earlier, right over around here, confirmed by Fisher. So potentially, if you're using the weekly, you need to decrease the sensitivity on Wadatar explosion. But yeah, I don't see a lot of good bullish activity coming in here from the MCO USD chart. On the daily chart, we've just been riding a downtrend for quite a while. We had a nice opportunity to re-enter on a reversal baseline bounce here and here. Also here, price moving to the downside, but of course we can't short MCO USD. So this would be something that I'd just be far away from until we actually crack above the baseline and put in some bullish momentum. You can see how Wadatar explosion basically kept you out of any long trades, basically since May of 2019. We got a trade here. We got a nice daily trade right here. And if we go back to April, we got a daily trade there on Monaco, the dollar. But pretty much it's just been nothing but red, man, which means we're trading to the downside. And Minx confirming that as well. Nothing but red. This doesn't look super great, man. I definitely need to see some bullish activity. We are coming down for something like a double bottom. You guys know that I don't use chart patterns. This would actually be, if we look back in time, this would be something like a third retest of this level of support. Obviously, as we know, the more often that we test support, the more likely it is to crack and break. I actually do see this being as somewhat of a BPC, where we have price close below support, come back up and back test it as resistance. So this doesn't look good to me, man. Bullseye says, any chance of explaining how to use ATR? Sure, it's super simple, man. I would love to. So let's pull open. Let's just go to TradingView. And let's just type in ATR. All right, we have average true range right down here at the bottom of the chart. And we're going to go to Bitcoin USD to explain. So we have average true range down at the bottom of the chart. And what we want to do is, this is just an example, so this is not going to be exactly how I do it. There's more nuance. Obviously, I've developed Quadriga ATR, which has a lot of features, as you guys can see. But this is going to be your base process. So you need to determine, what is ATR? ATR is telling you, on average, this is the average distance between the high of a candle and the low of the candle, meaning that on any given day, there is a high probability that price is going to move up or down or around the value of ATR, because that is the average range from the high to the low over the last whatever look back period, right? So the way that this is calculated is it's high minus low, it's high minus low price. That is the value of ATR. And then you create a simple moving average of that. And you take the true range of the last, I think that the default is 15. It's 14, excuse me. The default is 14. And then you average that out. Now, so when using ATR to set targets, it's pretty simple. You're just going to want to choose what value of volatility you want to target for your take profit. So wherever price is right now, all we're going to do is add that ATR value onto it. So if you are targeting, if your first take profit or your take profit target is going to be 1 ATR above your entry price, you would take current price, which is $11,736.96, and you would add the value of ATR to that. You would add $730. We can just hold down shift click. It's not going to be 100% right, but it's going to be pretty close. And we come up here to about 12,491. Put a horizontal line there, and there you go. There's your take profit. Now, here's what I recommend for setting your stop loss. You need to set your stop loss outside of the range of volatility, meaning your stop loss needs to be farther away than ATR, because if your stop loss is within average volatility, that means that there is a high probability that your stop loss will get hit just as a natural result of volatility. You don't want that to happen. So that means that you need to place your stop loss farther away than the value of ATR. So for an example, let's use 1.25 ATR. So this is pretty simple. We're just going to pull up a calculator. We're going to take $730 times 1.25. $730, which is the value of ATR right now, times 1.25. And we get $912.50. So same thing. We're going to take current price. We're going to move down $912, which is right about here. And there's going to be our stop loss. And now that we know the distance to our stop loss, which was that $912, we can calculate a position size based off that and our risk percentage. So what position size do we want to put on where if price moves down, so our stop loss is going to be about 7.48% away. What position size are we going to put on where we lose 2 or 3 or 4 or 5, whatever risk percentage you're trading with, of our account if price moves down 7 or 8%. So that is the calculation. Now, you can see that this is an asymmetric risk to reward ratio on the basis of risk to reward. We are risking more to earn less, right? So we are risking well, in this example, it's not 100% perfect, but we are risking more. We are risking 1.25 ATR to earn 1 ATR. Okay. Now, the way that I compensate for this is that I don't take all my profit at take profit 1. I am a trend following trader, so I look to take my profits over time. So that is how we compensate against that. But again, if you are setting your stop loss inside the realm of daily volatility, I think you're going to have a bad time. Let's look at silver. Just nice, big, beautiful green candle, man. Let's take a gander. Let's see here. We're going to get rid of ATR. And we are going to... Here was our original entry into silver right here. We can see the buy signal down here around $15.50. Price currently trading at $17.21, meaning we are up a total of 10.65% from that original buy entry. Obviously, I am a silver investor. I have quite a bit of silver. Anyway, so price moving to the upside. Silver is part of my investment portfolio. So silver moving to the upside, we would have been out of our silver position. We would have been out a little bit here. We would have been out a little bit here, and we would have been out the rest right here. Looking for a reversal baseline entry, which would have got us back in. And then we do have the continuation signal from Minx right here. Right here. So Minx would have gotten us back into this trade on this candle. Is this an area where I would want to get into silver? No, I don't think this is a good buying opportunity. I think that silver is quite bullish, but you never buy on big green candles. You wait for a pullback or you wait for continuation. Now, we also don't have a rising explosion level. So there's a lot that is keeping us out of the trade right now. The continuation entry on yesterday's candle was valid though. Cryptonomics says, if the stop loss is farther than ATR, doesn't that influence position sizing? That was the point I was trying to make earlier. Yes, the distance to your stop loss is going to influence your position sizing. But if you are position sizing with the same risk level, then it doesn't matter. You're going to be losing the same amount of money regardless if your stop loss is 8% away or 80% away, because you're going to position size differently. So the risk is the same. The position sizing needs to change to allow the risk to be the same. Yes. So Ray Dalio says we are approaching a paradigm shift where currencies are all going to be devalued long term in the next 2 years. Do you see gold, silver, and Bitcoin to all be profitable assets? So I read the article from Ray Dalio's paradigm shift. In fact, I'll try to find I talked about it. I talked about Ray Dalio's article on paradigm shifts for about 30 minutes on a video. I think it was last week. Maybe it was, yeah, I think it was last week. I did not get that currency devaluation concept from Ray Dalio's article. So potentially I'm taking a different takeaway from you. But to answer the question, do I see gold, silver, and Bitcoin to all be profitable assets? Yes. Yes, I do. Compared to bonds, treasuries, stocks. Well, that's different. Do I think that they're profitable to hold? Yes. Do I think that, am I a bond or treasuries investor? No. Am I a stock investor? Yes. So if the market moves, if the stock market corrects 50%, I will buy the dip. I will buy down into the dip because I invest for dividends. I invest for passive income. I am a long-term investor. I do not think that the American economy is going to collapse or fail, because if it does, then there's nothing you can do to prepare yourself except for stock up on bullets, bandages, and MREs. So I'm definitely not losing anything by doing the best planning that I can for my family's future, which is investing, developing long-term generational wealth, always improving my portfolio, always adding to my portfolio, continuing to save money every month, living frugally, making smart decisions about my money, and doing what I think I can do to help influence the entire space in a positive light. All right, guys. So with that being said, I want to thank you guys. I want to thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. Of course, I've been your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys have an absolutely fantastic day. Hopefully you guys go on to trade safely. If you guys like amazing crypto podcasts, then I highly recommend that you check out the Breaking Bitcoin podcast. Scott spent many sleepless nights and tiring days putting everything together to offer you another way to listen to the show at your convenience. So head over to breakingbitcoin.money. Link is in the description down below. You can see the current and past show notes. Right now, Google Music and Google Podcasts we are live on, as well as Stitcher, Spotify, and Podbean. Just search for the Breaking Bitcoin podcast. The name is Breaking Bitcoin. And now we are on iTunes. So let us know if you have a favorite podcast catcher you'd like us to add, and we'd appreciate it if you go over and leave us a 5-star review on iTunes. It does really help boost us up in those results, guys. If you guys would like to push your trading to the next level, make sure to check out the premium trading group at premium.crackingcryptocurrency.com. Top link in the description down below to improve your skills and join our community of traders and investors. Other than that, guys, if you guys want to support the show, make sure to like, share, subscribe, follow, and engage in the comments section down below for your opportunity to win some crypto, which we do give away every single day. I want to give a big shout out to today's crypto comment winner. Make sure to get a hold of me in the Discord, Tomas, Riha, and I will tip you some crypto as you well know if you guys have any questions, comments, concerns, sarcastic remarks, and or death threats. Please leave them in the comment section down below, and I'll try to get back to you within 48 hours. Other than that, I've been Justin Wise. This has been Breaking Bitcoin. Trade safely, and I'll see you guys tomorrow.